market wrap. Where are we today? We came down to the daily three. We did break the daily ones finally, tested the R vol, came back into the distribution, but hit the moving average and came right down. Came right down to target and then bounced up. And we've been pinned here. And my apologies for the report this morning. Placeholder numbers were put in the report originally. I didn't notice it until this afternoon and got the actual numbers put in. It used the September contract by accident, which um, was actually my fault. I had both the September and December on the market analyzer that I feed in the morning to get my levels generated. So it just unfortunately picked the wrong levels. So I did get that straightened out. So the report is accurate on the website now. But it did, absolutely nail it. Came down to daily three, and it held because of the compression of volatility um, by the option dealers. The dealer option flow is what I'm trying to say, indicates the pinning structure of the market um, overall was being supported at this time. And you can read um, these technical levels and the narrative on the website for subscribers that goes into detail about showing how this neutral structural framework flow occurred today. And then should that gamma break occur where it did at our daily one, then it would be a violent thrust, which it was, a big bear bar. And that I think is going to be kickstarting the flow now going forward. I don't think that we'll go back. I think that we will maybe stay neutral inside this lower corridor. We're below the weekly one solidly. So we will, oops, sorry, the 30-day ones, 30-day ones, we're acting sort of like the mean. So anything remaining below this, I'm sorry, did I say 37-day? I can't decide which screen I'm looking at. 7-day one. So you have your weekly one and then your 7-day one. So your 7-day one was acting as the mean inside the weekly, but it was sort of structured, higher than the actual average. So, but that's going to be like the pin for the market now. So anything below that will stay low. And this is also confirmed with the VIX monthly. We got above this 1661. We're sort of sitting on it right here. So we pierced above it. And anytime that we stay above the 1661, we're going to be long vol. Even though the long vol, I would say 1654 to the downside. Even though this long vol is not really long until we hit 20. 20 is the big, Gex line. But we do have another mean in my middle of my monthly distributions at 1908. So we can go from this 16.5 to 19 range before getting really long vol. above 19 to 20. Anything, of course, above 20 is going to be um, very long vol, and that's just not, I'm not seeing that at all on the current um, dynamic. In fact, it might be hard to get above 19.5, this mean. So it will be an opportunity for positive volatility, but low. Positive meaning on the other side of the zero line. We're no longer negative GEX, we're positive GEX, above the 1661, right where my monthly mean is. So this is all positive GEX. In fact, I should just type that in here so that y'all can see it. So the volume has not really filled in on the GEX at 17, 18, or 19. 20 is your high GEX, and it is gaining a lot of volume. So 20 is getting stacked with the GEX volume. All right. So just keep that in the back of your mind. And that's one of the reasons why I think that we'll start range trading down instead of up, going through the next few days. Maybe, through October, OPEX. And then we can flip back to short vol for the Santa rally after OPEX of October and into December. That's currently the way that I'm reading the VIX volatility with the higher time frame. So just keep that in the back of your mind. Of course, anything can change. There is a lot of positivity with the AI announcements with OpenAI cutting deals with both NVIDIA and Oracle. So there's going to be a lot of tech build out in the USA, a lot of tons, trillions of dollars pouring in for tech space. So we can, keep our eye on, NQ and maybe see a little bit of a bifurcation between NQ and ES. I don't know. I keep thinking that could be possible. NQ certainly has been the dominant force for the E-mini and SPX complex. So is it enough to carry SPX and ES off of their, trajectory of that 5 to 8 to 10% pullback? It could be. I mean, we might just, keep lifting those boats off of the AI engine alone. So we'll have to keep an eye on that too. So there's so many unknowns with this right now. But what is known, as you can see right here, the market is sitting right here on my monthly mean. And where do I get my monthly mean? How do I know that's my monthly mean? The VIX is calculated using 23 days, 30 days, and 37 days. And this particular mean at 1661 is calculated using oops, this right here, the 30 day, the 30 day on the close. So you can see here's the 30-day low, here's the 30-day high, and there's the mean, 1661. Those are my Jats PT calcs. So you can see we're right dead spot on the middle of this market. And that's the flip line. That's actually the flip line. When you go in and look at your dealer GEX, it flips negative or positive right here. So you know that I'm dead bang spot on with my calcs. I mean, right there's proof. If you know what I mean, Jelly Bean. All right. So, but the volume between 1661 and 19 is small. It's like it's positive, but there hasn't been much contracts put on there for dealer GEX. It's all sitting on 20, which, think about it. We could fly through it. If you put a catalyst out there like Jay Powell saying, I don't care what you want, we're not going to raise rates or cut rates anymore. You know, whatever, somebody can find a microphone and God knows what they're going to say. The market could cut through it like butter. So, and it's positive. It's positive going from 1661 to 19. So just keep that in the back of your mind. Yes, there's not very much volume on it for the GACs, but that doesn't mean the market can't just slice right through it. All right. Which is why this daily 3 pin was so interesting for me today, knowing that we were right there on that VIX line, and my oscillator readings were so high for my compression. So if you go look at the report and you see that these frameworks showed the compression, this VWAP reading and my pinning force, VWAP and BDI, were very dominant today in the structure, showing that structural clamp. So even though we had the gamma pin break on the daily one, all of the other elements are inside the middle. We only had the two elements up here elevated. All of this is structure in the dealer flow, showing that it was going to be hard to break that 3. So when you put these things together, I have, tried to design a structural system using options to show whether these ranges are going to break or, fade or hold. Fade meaning send it back to the reverse to the mean or just hold it on the pin. And this was pin day. Yep. All right. So we'll see what tomorrow brings. We're going to have some new numbers tomorrow, no doubt, since we've broken out of our 7-day ones, broken below it. You see the lower 7-day one is down here. This is the upper 7-day one, but it's the same concept. It's like once they move back inside the range, see how they had broken out of the 7-day one, it looked very bullish. Now that they've moved back inside, it's going to be damn near hard for them to want to have to move risk back out. they've already moved their risk down to clamp it down. So that's what I think. So this was the sell the rip, and we're back inside the monthly twos and inside the quarterly twos. This is the most important right here, the quarterly twos. This was a level I was watching, and there was my dealer gamma, or excuse me, gap risk. So you can take the difference between the open and the close, extend it um, on the other side for your hedge gap, dealer hedge gap, and that allow it to wick it, but send it back down. So we're back below the quarterly twos, and that would be through December 30th. Okay, so just to give you a heads up, I think we'll be coming back to this monthly one, 66.75, and then see what happens from there. 67.74 is the 6-month one. So that's, a pretty big level now. Also, that level was extended from the prior range break. And so if they are envisioning a deeper pullback, their risk is likely sitting right there at 67.75. All right, that's what I have for us. Hope you have a good evening, and be sure to stop over to the website, grab a subscription to Jats PT or the Substack, and we'll talk at you soon. Let me know if you have any questions. Thank you so much.